Hello, trading is closed on February 22nd, 2022. We always start by going over our disclaimer. This is my plan for tomorrow, February 23rd. Please remember I can be wrong. Any trade you make should be at your own risk. Start by going over our calls. Look for the pattern with the early low, which is this. Tomorrow should have the early high. We said that the pattern was potentially positive, that unless we gapped and promptly undercut this low, we should see higher prices. Here's what we said. The low holds, could be a decent rally. Well, the low didn't hold. We gapped and promptly undercut it. So all these higher targets are off the table as far as time, but not as far as price. The optional target, we forget if it doesn't print in the day. This other target, 4390.70, doesn't run out until early tomorrow. It looks pretty far away. I don't think it'll print, but until we complete the tomorrow morning pattern, it hasn't failed yet. If it does fail, which it probably will, we'll have to add it to the list. We now have a decent number of higher targets which haven't printed, and that can happen during periods of strong impulsive moves. But eventually, with just about 20 years history, they will print. Just doesn't say when. Now, we did have lower targets. We had an optional target that printed, and it was resistance at the target. We also get to cross the last lower target from this year off the list, 4308.82, and the next lower target's about 4214, and that printed in June. So all the lower targets from June on have printed. We gapped down, hit a lower low, closed over the low. It's positive of sorts, if there can be much positivity in a drop like this. So either you gap and take this low out early, or you should see higher prices even if you don't close lower. And we do have a target of 4337.51. And if we don't gap down smartly, the rules call for that to print. When you have a big impulsive move like this and you're leaving all these higher targets behind, I take it with a grain of salt, but that's what the rules have to say. And futures are up, so it's entirely possible. During the day, we got an ultimate buy signal and a buy signal. Just means there's a higher target, and that printed pretty fast, and there was resistance over it. When it printed, the move was called false, wouldn't stick. We had an optional lower target, and that printed. This drop is said to be false because there was no sell signal here, and gives us a target of 4337.51, most likely by early Thursday. JT, why this moved, I don't know. MEJT said this drop was false, so it wouldn't stick and we'd overtake this line, and we did. Now we have all these higher price targets. How likely is it they're going to print? Well, if you look at just about 20 years worth of history, you'll see there are very few targets which don't print at some time. We still have 3 regular and 1 ultimate target from last year. They occurred over 4 separate weeks. There were still 5 separate weeks in 2020 when the targets didn't print, and before that you have to go back to 2016 to find some which didn't print. So at some time I think these higher prices will print, these higher targets will print, but that doesn't mean you won't go lower first. There are still some of these I want to cross off the list. The next one we have to cross off the list is 4214.73. And we actually came pretty close. And I do think it's going to print at some time. And there just aren't that many more to cross off, but we'll just write that one down. Doesn't have to print tomorrow, obviously. Let's come back here. This is one bar completely under Tom DeMarc's TDST line. That's his support area. If we print one bar completely under this bar, support breaks. Otherwise, this is an area where he looks for support. Now, we have got a volume spike in the E-mini contract. These tend to be associated with lows. They don't always work, but they're not too bad. I'd be happier if it were a higher spike, but even if it only is a brief rally, it argues for a brief rally. Now, I don't know what tomorrow's volume is going to be. It could be higher with a drop. That's not impossible. So you can't bet too much on that, but at least it's a sign of a low, even if I don't think it'll last forever. Now we do have this trend line here. This break didn't start with a gap, so I think we'll return to the trend line, but that's really only a few points, and nothing requires us to return to it tomorrow. I can count an ABC down with the FEBs working, but it looks kind of a forced count to me. It breaks no rules. If we rally, that's the explanation, but normally if I have to work too hard to get the count turns out to be wrong. I'm not saying this is, I'm saying that I'm suspicious it is. Now tomorrow's pattern has the early high. We could still gap down. If you're dropping to 42.50 in futures, the market staged a great recovery and actually traded in the black. Had this been maintained through the open, it should have led to a great rally. A friend of mine, the late Bill Blount, described this pattern to me as the Peon trap. Peon is his way of saying, you European. He meant all the Europeans who shorted overnight would be forced to cover and go long. You have a big drop and recover it all. That's a good sign as long as you hold it through the open. But the failure of this pattern, like the failure of any hugely reliable pattern, usually leads to a strong move in the other direction. And only time will tell if the drop today was strong enough. When these things fail, they usually fail in grand style. There's a higher MEJT target. Unless we gap down smartly, the rules call for it to print tomorrow. Be aware that during times of strong impulsive moves, the chance of the target failing to print in this referred time frame increases. The big drop was unable to generate a close under the midday low. And if that's maintained at the open, it's bullish, but it would have been much more bullish had the rally continued, as clearing a more significant level would have been more convincing. The E-mini volume spike typically occurs close to lows, but it would have been more convincing had it been larger. We have an ABC with A equal to C in that last wave count I showed. We have a higher MEJT target. We have an unsatisfactory break of a trend line. They all argue for higher prices printing at some time tomorrow, but that doesn't assure a higher close. Breadth deteriorated a lot today. I'm not convinced this decline's over. Doesn't mean we have to trade lower tomorrow. So tomorrow's a pattern with the early high. Here's the ABC, and C is equal to A. If you like that kind of stuff, it gives you some hope for a rebound. And we have a higher target. If we don't gap down, the rules call for that to print. And the pattern has the early high, and that's today's call.